Hey everybody, my name is Brandon from thestockstreams.com, and today I want to talk about Nio Stock, ticker symbol NIO, and how it is down about 40% in the last 6 months. So now let's get started. So here we are on Google, but firstly here I want to take a minute to say that I know I have taken quite a long break from YouTube, and honestly that is because I have been working on building some different streams of income. I had to make a hard decision to try to make the most out of an opportunity that was presented to me while I had the opportunity, and unfortunately I just did not have enough time or energy to keep this YouTube going during that time. But as you can see here, I'm back, and while I'm proud to say that I have made the most of that opportunity, I hope to stay back here on YouTube to make the most out of this opportunity for a long time to come and post a video probably about once or twice a week. But with that said, let's take a look at news screenshots here in Google, and we can see that on Friday we have had quite the tough day, off about 5% here. But of course that is just one day's worth of action, and one day really never tells us the full picture. To try and get a better picture of the full picture, if we take a look at a 1 month view here, we can see that we are down about 22%, whereas in the 6-month view, we can see that we are down about 40% here. So now we get a better sense of the story that this stock has been going through in the past few months, and what a slippery story this has been. So as always, the first question that I want you guys to continually think of when watching this video is why? Why has Nio been sliding off a cliff the past few months, even though if we scroll down here at the news, we can actually see quite a bit of bullish commentary here from the journalists. So of course, one of the macro reasons of why Nio has fallen is of course the geopolitical uncertainty that surrounds the Chinese stocks at the moment, including Alibaba and Nio and Tencent. I don't have to remind you that in the past year, the government has stepped in and placed some heavy regulations around China's big technology companies, most noticeably Alibaba and Tencent, which is talked quite a bit about in this Diplomat article here. Obviously, opinions are plentiful on this topic and on China in particular. Now, we won't get into the politics of this, but from a human perspective, regulation oftentimes benefits the consumer and the regular person. I have worked in the pharmaceutical industry as a chemical engineer for some years, and even though I do not like dealing with the regulatory hurdles that comes with bringing medicine to markets, I know these regulations are important because I do not want hair or lethal amounts of arsenic or lead in my Tylenol. The same goes for the regulations in the other sectors. While the umbrella of regulation can be thought of as something that slows the growth of business, it is sometimes for good reason. But for our purposes, this is an investing channel, and the fact of the matter is, regulation is likely to hurt business, even if the goal of the regulation is to better the economy. So because of these heavy regulations, and probably more importantly, because of the unpredictability of these regulations that the Chinese government has imposed on its own businesses, this is likely the reason why we have seen such underperformance and the destruction of capital in Chinese stocks such as Nio. So now that we have an idea of what has happened to stocks like Nio, we have been able to understand a little bit about the past. But the question for investors like us is always, what about the future? If we take a look at the CNBC article here, it appears that the authors of this article believes that it looks like the worst of regulation to these Chinese stocks such as Nio may be over. In the article, Evelyn Chen, the author, suggests that even though it may not be the complete end of regulation to Chinese companies, the harsh, heavy-handed actions like the ones that we saw in the previous article are less likely to happen in the future. And the author points to some easing of the tone in some Chinese government official press releases, which are made likely in order to keep China growing at their 5% target year on year. And you know, maybe she's right. Maybe the tone of government officials have eased a little bit, and that would definitely be a bullish sign for these Chinese stocks. However, if someone wants to invest in Chinese stocks such as Nio, they better be aware of the risks that regulation could come at any time, and the magnitude of that regulation, which we saw last year, could be very great and could be a very great destroyer of investment capital. But with that said, in my opinion, I do not think that the Chinese government wants to bring a recession to their own homeland. I think instead they want to control the growth rate of their businesses. But as an investor, I always need to manage my risks, especially risks to something that I cannot control, like the Chinese government. So after talking about the macro regulatory picture of Nio and how it may be improving, now let's head on over to Nio's earnings report so that we can talk about how Nio is doing as a business. So here we are in Nio's earnings report for the third quarter of 2021, and the first thing I want to look at is this summary of their results. So this again is Nio's third quarter report, and we can see here some honestly mixed results. What they show is the third quarter of 21 in this column here, the second quarter of 2021 to see a quarter over quarter view in this column here, and the third quarter of 2020 to show the year over year view here. And you can see that they calculate some math here and do the quarter over quarter and year over year percent change, which is nice because then I don't have to do the math. Just by looking over these numbers quickly, we can see here that the quarter over quarter numbers are honestly a little bit dismal and a little disappointing at best. But our year over year metrics here are actually pretty impressive. So one of the examples of where we can see this is vehicle sales. Here we can see the quarter over quarter, we are increasing vehicle sales by about 9.2%. However, year over year, we're increasing our vehicle sales by 102%. So this is just one example of where the 9.2% quarter over quarter is not really that impressive, but the year over year doubling of vehicle sales is very impressive. But now let's talk a little bit about margins here. The first margin that we see is this vehicle margin here, or the amount of money that they are able to keep from selling a car. And we can see that quarter over quarter, we are able to keep from selling a car by about 2%. However, year over year, we actually increased our margins by about 3.5%. We can also look at this gross margin down here, and we can see that in the third quarter of 2021, we have about 20% gross margin. So I like to look at margins when talking about any business because this is a measure of efficiency in the company. However, for newer companies like Nio, this is also a measure of pricing power for the company as well. For traditional automakers like GM, I think their average margin on the sale is about 10%. But here in Nio, we can see that the margin is about 20%. This is definitely a good thing. It's showing that Nio is able to price cars a little higher compared to the cost of goods sold compared to other traditional automakers like GM. The last thing I want to talk about on this page here is this loss from operations line here. We can see that quarter over quarter, we are increasing our loss from operations by about 30%. And year over year, we're only increasing our loss from operations of about 5%. Any increase in this section is a bad thing. We do not want to increase the amount of money that our business is losing. As investors, we want to see a return on capital. We want to see our money go out and get more money. However, as we can see here, Nio is still operating at a loss from operations as well as a net loss. As always, with companies like these, the risk shareholders have to consider is that Nio will be unable to turn a profit in the future. That's a risk that shareholders need to consider when they are investing in companies that do not make any money right now. But now, after talking about Nio's fundamentals and about how we are seeing a little bit of a mixed picture here quarter over quarter and year over year, it's up to you to decide if you want to believe the seemingly bearish quarter over quarter numbers or if you want to believe the seemingly bullish year over year acceleration numbers. The last thing I want to talk about here is, what is Nio spending on? And we can see that by looking at this more detailed view of the earnings report, which I pulled up here. We can see that Nio is really opening up the faucet to research and development and selling general and administrative, shown in these numbers over here for the third quarter of 2021. So this acceleration of costs here should also be considered for investors. And, again, lastly, just a few words for the fundamental bull case of Nio. EVs will likely play a large role for the future of transportation, and Nio does have brand recognition and a head start in China, but that's a macro bull case. Both macro cases and microeconomic factors such as how the business is run should also be considered in the investment thesis before an investor decides to commit capital to a business. It's up to you to decide, but with all that said, let's head on over to the trading charts to see if there's a level or two to buy Nio if we want to buy Nio. So here we are on Nio's trading charts, and we can see, looking back from about a year, we can see that we are floating above this long-term resistance level around the $20 to $22 level. we can see that we bumped our heads up against this for quite a while before breaking up above that level here, because past resistance often becomes support. So of course that is why I think that this $22 level would be a place where Nio could settle. However, I could have said the exact same thing for this support level here around the $32 level, from the bottoms of these candles over here and the tops of these candles over here and the bottoms of these candles over here. I could have said the exact same thing a few weeks ago, but we did break down below that level. So as always, this is just one reason why technical indicators should never be the reason why an investor should make an investment. However, it could help an investor decide where to open up a position. For me, if I wanted to expand my position in Nio, I would be waiting for a test of this $20 to $22 level again. Lastly, looking at the MACD and RSI down here, we can see that the MACD is positive. The blue line, which represents our short-term momentum, is above our orange line, which represents the long-term momentum. That is a bullish sign. However, if we zoom in here, it does look like our blue line may be rolling over, and that would be a bearish sign. So to me, this MACD chart is not telling me too much at the moment. Looking at the RSI here, or the relative strength index, we can see that our RSI is kind of floating in between the oversold territory, which is down here below 20, and the overbought territory, which is up here above 70. Because it is neither overbought nor oversold, this again is not telling me too much. Because I normally like to buy things cheap, this chart, the RSI, would be telling me something if we were in the oversold territory below 30 here.